When you set out to buy a home here in North Carolina, you'll want to make sure you understand all the costs you'll be paying along the way, especially because there are some unique ones here that might surprise you. And while most everyone knows about the down payment, a lot of buyers, whether you're a first-time buyer or you're just new to buying in North Carolina, don't always know about what other money they'll need to bring to the closing table. So let me break it all down for you. But first, my name is Matt Martin, and not only am I a Raleigh-based realtor, but I'm also a transplant to the Triangle region, originally from LA and New York City. I've helped tons of clients, just like you, do exactly what we did back in 2021 and relocate to the Triangle region. So if you're looking to do the same, I'd love to help you too. Now, today, I want to map out the real cost of buying a home here so you don't run into any unexpected financial surprises. And I'll break all your closing costs down into 3 simple buckets. First, the required fees everyone pays, then a couple of optional things that are critical for your protection, and then finally, the financing costs. And make sure you stick around for that final bucket because I'm gonna explain exactly how the calendar timing of your first mortgage payment works, which can give you a very helpful cash flow break right after you move in. But first, let's establish a quick baseline. So this video focuses entirely on resale homes, anything that isn't new construction. High level, if you're getting a mortgage, you can expect your closing costs to total about 2 to 5% of your purchase price on top of your down payment. But if you're paying cash, you can avoid the lender fees entirely, making it significantly lower. So let's start with bucket number 1, the required fees everyone pays no matter what. The first thing is something that's very unique to North Carolina and super shocking to anyone that's new here, and that's the due diligence fee. If you're from pretty much any other state, you're probably used to a deposit sitting safely in an escrow account that you can get back if your inspections go wrong and you decide to walk away. Not here. In North Carolina, you actually write a non-refundable check directly to the seller the moment your contract is accepted. This basically buys you the right to inspect the home and terminate the contract for any or no reason at all. Now, technically, this is optional, but I've only ever seen one deal in my career without it. But don't panic. This money is credited back to you at the closing table, so it's not an extra cost in the grand scheme of things, but it is a major liquid cash requirement on day one that catches a lot of transplants completely off guard. Now, there's no set amount for due diligence, but for a typical $500,000 home, I'd budget anywhere between $1,000 and $5,000. And if you want to learn more about due diligence, check out my whole video just on this topic right here. All right, the next fee everyone will pay is the attorney fee. See, North Carolina is an attorney state, which means a title company doesn't handle your closing, a lawyer does. They'll run a title search on the property and get your title insurance set up for you, and we'll talk about all those next. They'll also prepare the deed, coordinate your survey if you order one, and get everything recorded for you after closing. And for all this, the attorney will usually charge a flat fee around $1,000. Next up are your title insurance fees. As I just mentioned, your attorney will run a title search to ensure that no one else has claim to your property or there aren't any other encumbrances on the property. In other words, that no one will be coming after you for the property or for money after you close. But let's say something wasn't filed properly over the years and therefore didn't come up in the title search, and someone comes out of the woodwork after you've closed and claims they actually have right to the house. Well, that's where title insurance covers you in these instances. And here in North Carolina, title insurance is calculated uniformly across all providers. And while it's a sliding scale based on purchase price, it's about $1.50 to $2 for every $1,000 of purchase price. So if you're buying a $500,000 home, you'd be looking at title insurance of about $1,000. Now, here's a little insider tip. That amount can be reduced by up to half if the title company is able to leverage the previous owner's policy, as long as it's less than 15 years old. So you'll absolutely want to check with your agent and the attorney about trying to find a prior policy to help save you money at closing. All right, the next up, we have a few prepayments. First, you'll need to prepay your homeowner's insurance for the first year. The price can range quite a bit depending on the age of the home, the size, its safety features, materials used, a whole bunch of other things. But the average across the region as of 2026 is about $2,500. That said, I've seen 3,000 square foot homes with annual premiums as low as $1,800, and then 6,000 square foot homes that come in closer to $5,000. So it can vary quite a bit. Another thing you'll need to prepay are your property taxes. And you'll definitely want to pay attention to this one because it's the ultimate wild card and varies widely based on the exact month you close. See, in North Carolina, property taxes cover the calendar year, but the bills don't actually come out until July. And because of that, taxes are prorated at closing based on how many days you and the seller each own the home. So let's take a typical $500,000 home with an average property tax rate of about 1%, which would mean a full year property tax bill of $5,000. If you close before the tax bill comes out, the seller will actually credit you money at the closing table for their share of the year. So if you close April 1st on that $500,000 house with the $5,000 tax bill, the seller will pay you $1,250 for the first 3 months of the year that they lived there. And then you'll use that money to pay the full $5,000 tax bill when it comes out in July. But if you close after the tax bill comes out, you'll owe your share of property taxes at closing for the months that you'll own the home. So if you close on October 1st, you'll be the one paying that $1,250 in property taxes for the 3 months you'll be living there. But then you won't have to pay property taxes again until the following year. As you can see, it can mean a swing of thousands of dollars either in your favor or out of pocket on closing day. And because it's so variable, I made a whole separate video breaking down the exact mechanics of North Carolina property taxes, which you can find right here. But for your closing day budget, just know that your timeline dictates the cash that you'll need. And then to wrap up this first bucket of costs, if you're moving into an HOA community, you may need to prepay a portion of your dues. Then everyone will have to toss in around $200 for government recording and administrative fees. And that right there covers your required baselines. And now that we've covered the baseline fees, let's move on to two things that are technically optional, but if you skip them, your dream home could really turn into an absolute money pit. First is the home inspection. Like I said, not mandatory, but for reasons that go beyond the scope of this video, North Carolina just isn't a market where buyers typically waive these. And you can shoot me a message and I'll be happy to explain why. But a general home inspection runs about $500 to $750. And then you'll have add-ons for things like septic, well, termite, radon, HVAC, or pool inspections, which can push your total up to anywhere from $750 to $2,000 or more. Then the second thing is a survey, which runs around $700. This tells you exactly where your property lines are so you aren't blindsided later by a neighbor's fence or an unpermitted shed creeping onto your property. It also makes sure you're fully covered by that title insurance that we talked about earlier. Now, if you're a cash buyer, that's it, you're all set. But if you're financing your home with a mortgage, let's talk about what your lender is gonna add to those closing costs, including that cash flow timing break I mentioned earlier. And we're gonna start with the loan origination or application fee. This is honestly one of the most variable pieces of the whole puzzle, so make sure you're asking about it when you're shopping lenders. A bank charging a 1% origination on a $400,000 mortgage is gonna run you $4,000, while a broker charging a flat fee might only cost you $1,500 to $2,000. That's a big enough gap that it's definitely worth chasing down before you commit to anyone. The next up, we have the appraisal fee, which runs about $500 to $750. This is just the bank's own check to make sure the home is actually worth what they're lending you. If you want a full rundown on how appraisals work, I've got a video on the home buying process that covers it all in detail, which you can find in the description right below. Then you'll also owe mortgage interest for whatever's left of the month you close in. So if you close mid-month on a $400,000 loan at 6.5%, that's roughly $1,200. But if you closed on the very last day of the month, you won't owe anything. And here's the fun part and that cash flow tip. Since mortgage payments are made in arrears, you actually get a full month off afterward. So if you close in July, your first payment isn't due until September 1st, which will cover the month of August. So you aren't getting out of paying for the days you live there, but it does give you a built-in financial breather from writing a massive check right when you're paying for your moving trucks. Next up, and this is an important one to understand, most lenders are gonna set up an escrow account for you, which they will then use to pay your homeowner's insurance and property taxes going forward. So each month you'll pay into this escrow account, and then the lender will pay your property tax bill and your homeowner's insurance renewal each year. It's a great way to not get hit with these lump sum expenses once a year, but to get that account started, they'll usually ask for a few months worth of each upfront at closing, and that's on top of the full first year prepayments we already talked about. And then if you want to lower your mortgage rate, you can also pay for what are called points. 1 point costs 1% of your loan amount and typically buys your rate down by about 0.25%, a 1/4%. So on a $400,000 loan at 6.5%, 1 point would cost you $4,000 and likely bring your rate down to around 6.25%, which is a savings of about $65 per month. Now, that would take you just over 5 years to recoup the upfront cost. So whether that expense is worth it really depends on how long you plan to stay in the home. So talk it through with your lender or with a real estate professional with a 12-year finance background who can run those numbers for you. And then if you're getting an FHA loan, you'll need to budget for the upfront mortgage insurance premium, which is 1.75% of your loan amount. That's $7,000 on a $400,000 loan. And obviously this one catches a lot of buyers totally off guard. So if FHA is on the table for you, make sure you understand this early. But if you're going with a conventional loan, the good news is you can skip this one entirely. And then lenders will also tack on a few smaller fees for things like running your credit and certain certifications, but those usually add up to a couple $100s combined. So those are the closing costs associated with buying a resale home here in North Carolina. As I said at the start of the video, the average person will pay about 2 to 5% of their purchase price in closing costs, but I'm sure you can see now that they can vary wildly depending on a whole slew of factors. So if you're ready to kick off your home hunt here in the Triangle region of North Carolina, I would love to be your guide. You can reach me by phone, email, or text, and you can find all my contact information in the link below or by scanning this QR code right here with your phone. And if you liked this video, I have a whole catalog of others all about moving to, living in, and buying real estate in and around Raleigh, North Carolina. Here's another one here that you may like, so give it a click to keep on watching.